Yo, what is up, guys? Welcome back to another video. My name is Evan. In today's video, I'm going to break down the two trades that I took today. One being a massive green one being a small red one. Before we get into that, please check out the link in the description below for the Discord. I put my daily levels in there, and if you want to see those on a daily basis, please check out the Discord. I put these levels in there this morning, and with that being said, I'll hop into my screen. You can see we have QQQ pulled up. We are on the 5-minute time frame, just to point out the levels for the day. One level that I put in the Discord was a 405 level. I put that in there as a possible bounce on QQQ. And or if we decided to break below it, I was going to wait for a retest and then essentially a move lower. So as you can see, we ended up getting close to it and then bouncing, not exactly at it, but pretty close to it, and ended up bouncing. Going into the pre-market today, I essentially had a plan of either bouncing around this 405 or waiting for a possible, if I was not able to catch the exact bounce, waiting for a possible uptrend entry. Neither of those happened. Neither of those plays did I actually take. As you can see, we ended up trending down into the pre-market on QQQ. And as soon as the market opened, we pushed up. First of all, and if you guys don't know, the red arrows are my entries. The purple arrows are my exits. So keep that in mind here. One thing that I marked out from the pre-market was this level, right? And I marked this after the market opened. So I saw that we came up and we started rejecting around this area. And I said, well, I wonder why we're rejecting around that area. And I drew this box back here, right? Where we had previous support in the pre-market, came down, broke through, and then we had a rejection area right here, right? Resistance right here. And then we moved below. So price came up into this area. We started rejecting. We had multiple rejections in this area. Multiple rejections there. Lots of wicks up there. We ended up pulling back. And once we started to pull back is when I entered my first contract on QQQ puts. With that, I stayed light because I didn't know if this was going to be a reversal or if this was going to essentially just come back, bounce, and then stop me out. My stop loss was above the previous high. And this is one thing that I want to point out in both trades that I did today. And it's very easy to do this when you have that high to base your stop loss off of. Every time I look at a trade now, right? I've been trading consistently for about a year. So every single day that I look in the market and every single trade, possible trade setup that I look at, the first thing that I look at is what is my risk here? How can I define my risk? That's what you need to ask yourself. How can I define my risk? I'm taking a put here. Where's my defined risk? The top of this wick, the previous high. If it stops, if it goes above that, I'm out. Because if it goes above that, it just makes sense that that's the way that the market wants to continue to go, right? Because we're already starting to move back up. So if we're going to bounce here and break back above this high, why would I still be holding on to something? Inversely, if you look at it and you say, okay, I am going to enter this is a unique example. So you could say, I'm going to enter a call around this area. I want to wait for this 9 and 20 to hold, and then I'm going to enter a call. You could have taken that same trade, and then your stop loss would have been below essentially these previous lows right here, these previous wicks. Now you would have gotten stopped out on that, but in this case, we ended up taking the put and putting our stop loss above the previous high. So we had one contract here. We ended up pushing up, coming very close to stopping out, and then having a nice kill candle down. On that kill candle down, I entered another contract because I had more confidence in it. Once this candle formed, I entered a third contract with the idea that we were going to break the moving average to the downside. Now, a moving average is very significant, especially if we break it. And as you can see here, we had a nice reaction, nice break below it. So I was in at 3 contracts. At this point, we ended up bouncing one time at the moving average, coming up, getting rejected by the 9 and 20 that had now crossed over each other and folding to the downside. It's an absolute beautiful play, absolutely beautiful. Look at this. Right, we move up, we consolidate, and we reverse. Perfect reversal play. I love reversals. And so you can see we move down. Now my target on this one was around this area of the pre-market low. It was around 405.4, around that area. That's what I wanted price to hit for me to lock in profits. We didn't exactly hit that right away. We ended up coming back up, staying below the 9, and then pushing back down. Now, I was going to wait until 405.4. In this case, these candles kept coming down here, and this huge wick was definitely not, it was not very confident or making me very confident in wanting to stay in this trade, right? So we ended up coming back down, creating some more wicks. I ended up selling at this very close to previous low because I did not want to be holding it and have this thing fully reverse back on me again. So as you can see, I sold out of here, and from here, right, these 3 entries combined to here was 25% trade. So beautiful trade in the morning, beautiful reversal setup, super simple. And yeah, it just played out absolutely perfectly. Now you can see if I would have waited, right, I could have gotten that actual low. One thing to note here is we had 10 o'clock news of new home sales. I think it was new home sales at 10 o'clock. So once 10 o'clock hit, this was essentially from the news. I would have been gambling at that point with my position, whether it was going to go up or down or not. So moving on from that, the second trade that I had, we came back into this area, right? We came back into this area that I drew out. We ended up getting rejected slightly below it. And that was my idea. My idea was we're going to come back up into this area where we had previous rejection, right, from earlier on in the day. And once we started to break below this 9 EMA, I entered just one contract, a very small contract, very light position, right? Because now I had some profits to play with. So I had a very light position, and I didn't want to go all in on this, just very light, wanted to keep it simple, just to see if this would work. And the reason that I took this was because my risk was defined. Here's the defined risk, right? Same thing as this area, as this previous area. We come back up, right? And if I enter a put right here, like I did, then where's my stop loss? It's a break above the highs. And if it breaks above the highs, look, it wants to go up. It's that simple, right? Keep your risk defined. And I'm not saying keep your risk defined in terms of, oh, I'm going to buy in here and my stop loss is going to be way up here. No, you need to keep your stop loss as close to your entry as possible, obviously, but you need to give yourself some room to breathe within that trade. So I bought on this break below this 9. We ended up getting supported by it, right? Pushing back up. And I said, okay, here's a lower high. So hopefully we are able to push down. And my goal here was simply to break below this 45-day EMA and come right back into this area of consolidation around the moving average. We push back down, instantly find support, and push back up above the highs. I'm out right there for a very, very small loss, right? And the reason it was a very small loss was because my risk was defined. I bought in here and I sold here. I didn't buy in here and then wait all the way up here and still be in this trade thinking that this thing's going to reverse back on down. So one key takeaway, whenever you look for a trade, look for the risk. Instantly, when I look at this, let's say this area right here, if I want to take a put, right, where's my defined risk? My defined risk is a break above the highs. So I can take a put right here, and then my risk is about 20 cents to the highs, right? Because it's at about 407. Let's say you bought in at 407.16, and the high is 407.36. So my risk is 20 cents, with a potential profit of coming back down into this area of 406.7. So you'd make about 40 cents or so on the actual stock. So just those little things will help keep you safe within the stock market and help keep your winners larger than your losers. So hopefully you guys learned something from this video. Hopefully you can take away from it and apply it to your own trading. Once again, please check out the Discord down below for the key levels every single day, and I will see you guys in the next video.